Good afternoon, everyone. I'm Alfred Sanchez. I'm President and CEO of the Greater Miami Chamber, and I want to welcome you to another Thursday Chamber Roundtable, where today we're continuing in another one of our series of workshops that are designed to help you and your business. The topic, PPP forgiveness, where you can ask our experts. So, as always, these workshops are put together by the Greater Miami Chamber of Commerce and generously sponsored by CareerSource South Florida. Now, today's workshop, we're going to cover how and when to apply for loan forgiveness. There are a lot of changes in the laws, a lot of updates. So what about, the interplay of other relief packages like employee retention credits? There's a lot of questions out there, and I know that you have them and are burning to ask some experts. So today you're going to have that chance to ask two highly trained and very experienced CPAs who are with us today. Now, at the end of the program, if you still need help or you still have questions, Greater Miami Chamber has a program called GMCC Cares, where it's basically a virtual help desk to help you directly. And we literally will take you, if need be, all the way through filling out the forms together. We've got, CPAs and experts who have trained to do that. So please look at the chat, and we'll be dropping links into that. And please take advantage of it. You don't have to be a member to take advantage of it. Now, before I introduce our presenters, let me go through some of the logistics. I see you are aware that your microphones are muted. We have the chat box open for comments, for you all to interchange ideas, share information, and really want you to take a look and constantly, be on the lookout for that, because there's going to be a lot of information that is dropped in there, links to help you find greater help. And also, of course, if you want to share information, that's the place to put it. If you have a question for our two experts, you want to use the Q&A feature, because that's where they're going to be looking for your questions. If you put them in the chat, they may not be presented to them. So please use the Q&A feature. As a reminder, we're recording the session today, and we'll post the recording later on our chamber website. So without further ado, let me bring up to the stage my very good friend, Rick Beasley. He is the executive director of CareerSource South Florida, is also the chair-elect for the chamber. And Rick and CareerSource have been extremely focused at helping our businesses stay open and our people employed. They have a program called Layoff Aversion. You'll hear more about it later on, where we're really having grants of up to $10,000. These are grants, not loans, to help your business to reimburse you for the cost of some of the items you had to purchase to make sure that you have a safe environment for your employees and your customers. So, Rick, I want to bring you up and let you make some welcoming remarks. We really want to thank you for your sponsorship.
Well, Alfred, good morning to you. Good to see you. To everyone who's participating, it is good to see you. I hope soon that we can meet in person and have these events. But my hat's off to Alfred, you and your staff, to Tanya, to Mary Lou, to Nellie, a number of folks there, Stephanie. There's a number of folks here at the chamber that you all have been working tremendously to be able to help our businesses. And that's what it is required. We went through this pandemic together. We have pivoted to be able to provide services. So on behalf of CareerSource South Florida, we thank you for your service that you've done to help keep our businesses afloat and help them through GMCC Cares and the Layoff Aversion Fund. And Alfred, you mentioned that. So that everyone here, that if you're still looking for assistance in hiring individuals, please reach out to CareerSource South Florida. Our job is to be able to broker talent to help our businesses grow. But because of the pandemic, we partnered with organizations like the Greater Miami Chamber of Commerce to launch the Layoff Aversion Fund strictly to help keep our businesses afloat, to help keep people working through a grant program, and not alone. It's through a grant program. And so we're going to relaunch that program so we can continue to help our businesses grow. But today's workshop is strictly on how the chamber is providing, again, another valuable resource to help our companies understand the PPP loan forgiveness process. And so as Alfred mentioned to you all, we're going to be able to assist you. We have great staff. We're going to be able to assist you in that process. So Alfred, again, we want to thank you, the Greater Miami Chamber of Commerce, for the work that you all are doing. Career Source South Florida is here to be able to help our businesses be able to find talent, reskill talent, and retrain your existing workforce. So with that, Alfred, thank you so much for what you all do.
Thank you, Rick, and really appreciate your sponsorship and your leadership. You're not only helping in this charge, but you and Career Source have made extremely generous donations to the mayor's Renew 305 initiative. I think over $1.5 million to really bring back our economy, which is, thank goodness, roaring forward. So before we continue, let me bring up my screen again. I lost you for a second there. Let me introduce our two wonderful panelists. First of all, my colleague, Mary Lou Rios, who's the CFO of the Greater Miami Chamber of Commerce. She began her career as a CPA at Pricewaterhouse, and she has served as CFO and managed numerous organizations throughout her career. She's even founded several tech and education startups. And certainly in this past year, she's become a bit of a PPP guru herself. Welcome, Mary Lou, and thank you for joining us and sharing your expertise. And Maggie Reach, CPA, who is a tax senior manager and member of BDO's PPP Advisory Champion team. She's been in public accounting since 2011, since the enactment of all the COVID-19 relief legislation, CARES Act, the American Rescue Program. She's been consulting on PPP loan forgiveness, and her proprietary calculations and deep understanding of the ever-evolving legislation has helped hundreds and hundreds of businesses that BDO serves. So with all of that, thank you, ladies, for being here. I know everyone's anxious to hear your presentation and ask questions. Maggie, let me turn over the screen and the floor to you.
Great. Thank you so much. It really has been quite a year, thinking back to all the businesses that we've helped and how much time we've spent digging into the changing law. I mean, it's been unbelievable. Every week or so, there's new legislation and new interpretation and whatnot. So let me start our workshop with my slides that I have prepared for you today. Basically, our agenda is pretty high level, but I'm going to go over kind of our tool that we use, because these calculations for forgiveness are very difficult and can be, even if your loan amount is less than 150,000, you still have to think about the reductions and whatnot. So the agenda for today, I'm going to go over some recent pandemic relief legislation. There's been a lot just in the past month, a lot of new changes. Discuss new PPP loans, some forgiveness updates, and the employee retention credit. And then we have some questions from Mary Lou to answer. So the first, we had the CARES Act, and then in December, we had the Consolidated Appropriations Act of 2021. So that was signed into law December 27th by President Trump. And some great provisions, or some included provisions of this, not only was it that $600 extra relief payment or stimulus payment, but it was also another $284 billion of funding for PPP. New loans can be made through March 31st. That was part of the provision. And then don't get too worried about that, because that 31st ends on Wednesday, and there are updates to that. So don't get too worried that you need to, get your application in. It also provided for a simplified forgiveness application for loans up to 150,000. Before, the simplified forgiveness application was for loans up to 50,000. So they broadened that. There were changes to the covered period. I'm going to go into that in a little bit. And they expanded the loan uses eligible for forgiveness. So different expenses qualify for forgiveness. And also group insurance payments qualified as payroll costs. I'm going to go into that in a little bit. like I said, it was effective December 27th. Another item that was great and unrelated to PPP was the extension of the deferred payroll taxes from January 1st to April 30th, 2021. It also extended credits for paid and sick leave. So it extended all of these great credits and deferral of payroll taxes that we were using with the CARES Act that had expired. Another great one is the EIDL loan advances no longer reduce the forgiveness amount. So, and I'll explain this a little later, but if you already submitted a PPP forgiveness application and you reduce the amount requested for forgiveness by the EIDL advance, the SBA will kind of disregard that and forgive the entire loan. And what we were really waiting for as tax professionals and CPAs were that the loan forgiveness amounts, the expenses would be deductible on the tax return. And another great one is that now anyone who received a PPP loan is eligible to claim the ERC for the Employee Retention Credit for 2020 and 2021. So you can retroactively claim the 2020 Employee Retention Credit. So soon after December 27th, passed on March 11th, was the American Rescue Plan Act of 2021. And this act actually added more funding to PPP, so $7.25 billion, which is actually interesting that this act didn't extend the PPP loan application deadline from the 31st to another time. So they funded the program with $7 billion more dollars, but they didn't extend the time to request. But that's in a little bit. I'll get into that. And it also expanded PPP for a lot of nonprofit organizations, online news publishers, and certain restaurants and shuttered venues. And another item that it did was it expanded PPP loan forgiveness to include payments made for COBRA health insurance continuation. But this only applies to loan forgiveness applications received after March 10th. So what we are really anticipating right now is the extension, the PPP Extension Act. So they want to extend PPP funding from March 31st to May 31st. That's a 2-month extension to apply for PPP funding. It was passed by the House 6 days ago, and it's with the Senate right now. I mean, obviously they've been preoccupied with everything going on from Boulder, but we expect them to vote this in the coming days and pass the legislation to allow borrowers to apply for additional apply for PPP funding until May 31st. Let's go into what the Consolidated Appropriations Act did. Was it provided more funding, and part of that was if you had not received a first draw PPP loan, you can now request one. So, as you saw, they added newly eligible newly eligible borrowers. So these borrowers can now get their first round of PPP funding. So basically the eligibility is that, you didn't get a loan before and that you are included as one of the organizations or borrowers that is eligible. Also, if you were a partnership, you calculated your loan amount based on the old rules versus the new rules, you can go back and ask for more PPP loan funding, but you can't if you've already applied for forgiveness. And you must be a small business, which is 500 or fewer employees, and you must have been in business on February 15th, 2020. So the amount of the original loan is the same. None of this has really changed. It's 2.5 months of average payroll cost using calendar year 2019 or calendar year 2020. So this is still for the first draw PPP loan if you hadn't received one yet. Payroll costs include gross wages, and they also added a new type of payroll cost, which is employer portion of group life and disability insurance premiums. So all of that you can use to calculate the 2.5 months average for the PPP, the first draw PPP loan amount. And similar to before, is limited to $10 million max or $20 million for an affiliated group. So what was great as of March 3rd, 2021, and this came out with a internal revenue, an IFR, it was that Schedule C filers can now use line 7 gross income to calculate the loan amount, which is helpful because a lot of Schedule C filers reported net losses on their 2019 Schedule C. So now they can use line 7 gross income, and the max loan amount for a single sole proprietor with no employees is $20,833. So then they expanded it to the CAA, the Consolidated Appropriation, expanded the program to second draw. So to be eligible for a second draw PPP loan, you had to have received a first draw PPP loan, and you have to have spent the original loan amount prior to receipt of the second draw. Employees, not more than 300 employees. So that's different from the first draw. The first draw, you could have 500 or less employees. The second draw, you have to have less than 300. And there's exceptions for the affiliate rules for NICS code 72. So basically, that means is you ignore the affiliate rules, you can have 500 employees per restaurant location or per hotel location. So that really helps a lot of restaurants and hotels that are franchised. And this is the big one. You have to have had at least a 25% reduction in gross receipts during any calendar quarter of 2020 compared to the exact same calendar quarter in 2019. So you look to, let's say, you look at all your quarters of 2020 and you compared them to each quarter of 2019. And let's say in quarter 3 of 2020, you had a reduction of 30% compared to quarter 3 of 2019, then you're eligible. So to showcase or to provide this that you qualify, you can use quarterly financial statements or bank statements. You could also use annual receipts from your 2019 tax return compared to a mock 2020 tax return. So you can use an annual method or a quarterly method. So you can check your annual 2019 compared to annual 2020, expected annual 2020. If you're going through an audit and stuff, that number might change a little. And one thing to note here is that if your requested loan amount is less than $150,000, you actually do not have to submit this documentation to your bank until you apply for forgiveness of the second draw PPP loan. If the loan amount is going to be over $150,000, you have to supply this documentation to the bank when you apply. So how to calculate the maximum second draw amount? It's generally the same as the first draw, which is 2.5 months. 2.5 times monthly payroll cost, average monthly payroll cost, based on, like I said, 2019 or 2020. But for restaurants and hotels, basically with NICS codes of 72, you can use 3.5 times the average monthly payroll. So that's a great benefit for restaurants and hotels. And the maximum loan amount is limited to $2 million per loan, or $4 million for the affiliated group. So that drops substantially since compared to the first draw. So let's go over some of the new PPP loan forgiveness updates. So like I said, there was a new 3508S that was released January 19th. And that's for PPP loans that are less than $150,000. If your loan is less than $150,000, you have to use this form. You cannot use any other form. What's great about it is that it requires far less calculations and documentation. But there is a caveat with this form. It's actually a lot more complicated than it seems. If your loan amount is less than $50,000, then you really have nothing to worry about. You can, submit the 3508S with all the attestations and certifications. But if your loan amount is greater than $50,000, and obviously less than $150,000, you have to certify that you did not cut salary or hourly wages by more than 25%, and that you didn't have a headcount reduction other than because of a shutdown or compliance with CDC guidelines. So if you can't certify those things, let's say you actually did cut wages by more than 25%, or let's say you did terminate employees because of COVID, then you actually have to use the calculations in the form 3508 to calculate reductions in the forgiveness amount. And the amount requested for forgiveness needs to be reflected of those reductions. It needs to reflect those reductions. So that's something that's new and pretty difficult. That's a trap for the unwary. So this is kind of what the form looks like, the 3508S. As you can see, it's to only be used for a borrower who received a PPP loan of $150,000 or less. Everything is pretty straightforward. I want to note, like I said, the requested loan forgiveness amount, it cannot just be the amount of PPP loan that you received. If it's, like I said, if it's over 50,000 and you had those reductions, you need to recalculate the forgiveness amount using those calculations provided in the 3508. The other new application is the 3508 Easy, and this is used either when the loan amount is greater than 150,000 and you satisfy one of these two criterias. And the first criteria is that you didn't reduce salary or hourly wage during the covered period by more than 25% compared to the most recent full quarter. So that's Q1 2020. And you did not reduce the number of employees or average paid hours of employees between January 1st and the end of the covered period. If you do claim criteria number one, you have to submit documentation that you did not cut the number of employees or average paid hours. So the documentation I recommend, this is kind of a confusing point. A lot of borrowers that I've spoken with don't really know what to submit for this. What we say to submit is headcount on January 1st and headcount at the end of the covered period. If the amount at the end of the covered period is less than the amount of employees you had on January 1st, then you don't satisfy this criteria and you have to use the long form 3508. The next criteria is that you must have not reduced salary wages during the covered period by more than 25% compared to the most recent full quarter. And you can attest that you are unable to operate during the covered period at the same level of business activity as before February 15th due to compliance with COVID safety guidelines. So how we interpret that is to be more of government shutdown, mayor's orders, things like that. Unfortunately, in the state of Florida, a lot of our business activities weren't halted so much because the state did reopen rather quickly. So it's been difficult to claim criteria B for a lot of Florida local businesses. So this is what the new 3508 Easy looks like. I'm going to go over a few of the extra eligible expenses. They're eligible non-payroll costs, but essentially it's the same as the old one. One thing that you do notice, and I'll go over a little bit later, is there's no longer this alternative covered period. It's just the covered period. And on here, you also have to add employees at time of loan application and employees at time of the loan forgiveness application. So let's talk about some of the new expenses that can be forgiven. Like I said, payroll costs now include group life, disability, vision, or dental insurance, and this is the employer portion. And there are 4 new categories of non-payroll costs. The first is covered operation expenditures. These are high kind of costs ancillary to the business. So business software, cloud computing, costs that facilitate business operation, maybe HR function, payroll provider expenses. There's also covered property damage costs, and that's costs that weren't reimbursed by your insurer related to property damage, vandalism, and looting during 2020. Covered supplier costs, payments for essential goods for which the borrower was obligated to pay during the covered period for perishable goods. Where I've seen this used is for restaurants who have orders in for meat or poultry before the start of the covered period. And then they had to basically dispose of that because they weren't open. Covered worker protection expenditures, so operations or capital expenditures to ready up the business for COVID. So masks for employees, those plexiglass for cashiers, hand sanitizers, and sprays, etc. And all these changes are retroactive to the effective date of the CARES Act. So if you haven't submitted your forgiveness application yet, you can go ahead and add these. But still, what has not changed is that 40% of the forgiven amount can be used for non-payroll costs. So that 60% requirement is still in effect. So the changes to the end of the covered period were great. This got rid of the alternative covered period, but the start date of the covered period is the date the PPP funds hit the bank account, so the disbursement date. And the borrower is now allowed to select a covered period between 8 and 24 weeks, when before it was 8 or 24 weeks. So now if you want your covered period to be 10 weeks, you can mark that on the application. It's very simple. And after the covered period ends, basically you're no longer subject to those requirements for the reduction. So let's say on week 10, you can't go any further. You need to cut half your employees. You end the covered period on the week 10. And then what you do after really has no bearing on the PPP loan amount, as long as you've spent all your proceeds during the 10 weeks. Please note that the covered period does impact the safe harbor. So before, one of the safe harbors, it was the headcount safe harbor. Basically, to qualify for the safe harbor, you had to reinstate your employees by the date you submitted the loan application. And now it's by December 31st if you received a loan before December 27th. So let's say you did cut wages and then you brought them back and you want to claim that safe harbor. Now it's December 31st. So it's either December 31st, and now for new borrowers in the second draw, it's the end of the covered period. So you need to bring your employees back by the end of the covered period. So some other provisions affecting forgiveness, like I said, EIDL grants do not reduce the PPP loan amount. And now, which is really great, the ERC can be claimed even if you received a PPP loan. Here's some items for your CPA. Forgiveness of PPP loan is not taxable income, and the expenses are deductible. One thing to note, if the business has received FFCRA credits, they are included in Social Security and Medicare taxes, but they are taxable and must be included as other income on the tax return. So if your company did receive FFCRA wages, those are taxable. PPP loans are not taxable. So let's go into the ERC, which is a really fabulous program now. Basically, what I like to tell people for the ERC, there's two requirements. The business was either completely shut down or partially shut down due to a government order, or in any quarter of 2020, the gross receipts declined by 50% or more compared to the same calendar quarter in 2019. So that 50% is a pretty large hurdle. But that's what I ask everyone. I said, before we get into it, just make sure, let's look at gross receipts side by side and see if we're in that 50%. If we are in 50%, then we claim that quarter and we look to the following quarter. If the following quarter was back up, well, if the following quarter only had a 20% reduction, 20% or less, you can use that quarter, but then you have to stop. So it's a little complicated, and I have a calculator that I'll show you in a bit that shows how it's done. But essentially, the credit is 50% of qualified wages up to 10,000 per employee for the entire year. So if you pay an employee $5,000 for quarter 3, and you're only eligible for quarter 3 of 2020, then the credit is 50% of the $5,000 and you stop. Some of the qualified wages include gross wages. We like to say this is Medicare, Social Security wages, and group health care expenses that were. And another thing here is that if you're claiming the ERC for a quarter and you got a PPP in that same quarter, you cannot double count the same wages. So you can't double dip in both programs. They have to be separate wages for each, dollar for dollar. So the program for 2021 is more lenient. Actually, this program with the Consolidated Appropriations Act was just quarter one and quarter two of 2021. And now with the American Rescue Plan, they've expanded this to all 4 quarters of 2021, which is amazing. So for this one, all you have to do is show a 20% reduction in gross receipts in quarter 1, 2021 compared to either quarter 1, 2019 or quarter 4, 2020. So it's either the same quarter in 2019 or the most recent quarter, which quarter 1, 2021, it would be quarter 4, 2020. And that same rule goes for the next quarters. What's great about this credit is that the $10,000 per employee is actually per quarter. It's not for the whole year like it was for 2020. And the credit is 70% of qualifying wages rather than 50%. So the max credit per employee per quarter is $14,000. So just by quickly doing the math, you can see how amazing this program is and how the money adds up here. And like I said before, if you received a second draw PPP loan, you have to be really careful not to double count the same wages for each program. So action plan. If you received, well, you've already filed, your business is probably already filed its 941s for 2020. If you found that you were eligible in any quarter of 2020, you have to amend that relative quarter of 2020's 941. So let's say you found out you qualified in quarter 2 and 3 of 2020 and you want to claim the credit, you're going to have to go back and amend the 941 for quarter 2 and quarter 3. And then for quarter starting in 2020, you just claim the credit on the 941 that's due in a month from now. So I think that is all of my slides. I think we can go over to some Q&A. I think we had really good questions, but I see we have a lot of questions in the Q&A, Mary Lou.
Mary Lou, you're on mute.
Oh, you're on mute.
First of all, thank you, Maggie. Excellent presentation, very thorough, and you addressed, I think, many of the questions that are in the Q&A, or some of the questions, but, I think that, the importance and the complexity of this situation warrants some repetition here.
Right.
So I just a few questions before we open it up to the group is, what is the minimal amount of documentation that you feel is necessary to satisfy a future audit?
For the forgiveness or the loan application?
Or both?
So the minimum amount of documentation really is just to show the payroll registers or the checks to employees and the bank statements matching how much basically went to that employee. So what they want to see is cash movement. They don't necessarily want to see a bank account with the money deposited. I mean, that might be easier for you to keep track, but they just want to match payroll occurring in the covered period to the cash that went out on that same day.
Okay. So basically payroll registers and
bank statements
that match to your bank statement so you can kind of see the flow.
Right.
Excellent. So you mentioned several times the American Rescue Plan and that there were some major changes. Just to kind of rehash those, what are the major areas that, that affect the business owners in both with respect to the PPP loans and the ERC credit?
Well, I think what they're doing is they're expanding the eligibility to different types of borrowers. I know that they also expanded eligibility to those who are delinquent on student loan debt. And I thought that was very interesting because they said that targeted area of the population that is underserved and that needs this funding the most. So they're opening the eligibility to a lot of businesses, and those 501c organizations they're opening to. And they're also allowing organizations to take advantage of multiple programs. So the shuttered venue operations, they allowed that. The ERC. So you can take advantage of multiple programs. You're not just cornered with the PPP.
Okay, great. And I know that we're running just a little bit behind, but I have some questions in regards to full-time equivalents, the FTE in the forgiveness calculation, because as you mentioned, this is a little bit complex, right?
Right.
So in that, the covered period or how you measure the FTE, you mentioned a date of January 1st, 2020. Was that just for the first loan application, or is that also applicable to those people who are applying for the first time for a PPP loan in 2021?
Right. So we only have forgiveness applications that are more tailored towards someone receiving a loan during quarter 2 or quarter 3. So those dates are a little, they don't really matter anymore. So we're still waiting to see what new forgiveness loan applications look like. If this measure, if you cut headcount, maybe starts on, I don't know, November 1st or something more relative to now, or maybe when the vaccine news came out, so we'll see as it develops, further, if they come out with a new application, how that changes.
Okay, so for those folks that are trying to determine, when they want to apply for forgiveness this year for a loan they took out in 2021, a PPP
Right.
loan, they're going to have to wait to determine.
We might receive, right now we're using the old PPP loan forgiveness applications, but there might be a new one that's updated for those dates.
Okay, excellent, thank you. And also in regards to this FTE calculation, the full-time equivalents, if an employee resigns during the covered period, or if you terminate somebody for cause, what are the implications on that FTE calculation?
Okay, so that calculation is interesting. So if everyone knows, well, just go back, a full-time equivalent is an employee who works at least 40 hours per week. So let's say during the covered period, someone was working full-time and then they left after 4 weeks. So their FTE calculation is going to be less than 1. There'll probably be a 0.4 if you take their average over the covered period. So this FTE exception, if that person counts as an exception, you basically assign them a 0 FTE. And then there's an area at the bottom of the Schedule A worksheet where you assign a 1, and you add up all of those employees who had these exceptions, and they basically don't count as anything at the top on Schedule A worksheet. And then they're added in at the bottom as a full 1 so that they don't penalize you.
Okay, excellent. So really you're only being penalized for people that you let go as a result of a layoff or,
Yeah.
Okay,
Exactly.
excellent. So the employee retention credit, which is super exciting, and I think it hasn't gotten quite the attention that it deserves
Right.
in the press.
Mhm.
You mentioned that, it's now in 2021, applies to all 4 quarters. But talk about, so you can't have essentially the same payroll period covered as an overlap with the PPP.
Right.
So you mentioned the other day that you have a very unique strategy that you came across, and that we're calling the Maggie strategy, right?
Right.
Could you share on how you can maximize the forgiveness on the PPP loan and also maximize the employee retention credit in this year?
So our strategy, number 1 goal, is do not reduce wages and do not reduce headcount. If you can prevent that, please try to do that during the covered period. But what we've said is if you can't double count the wages, then only submit however much you want. That adds up to 60% of the loan amount, and then maximize the other 40% in a full 24-week period. So in other words, I'm claiming a 24-week covered period and I'm submitting 24 weeks of non-payroll costs, but I'm only going to submit 8 weeks of payroll costs to meet my 60% of the loan amount. And then the other 40% is to 24 weeks. And that way I leave 20 more weeks, 16 more weeks available for ERC where I'm not double dipping the same payroll. So that's a strategy that we've signed off on and that, we're comfortable with. And we recommend doing that if possible. I mean, you really have to play with the numbers to get it right.
Yes, yes, excellent, excellent.
Yeah.
So I'm going to move towards the questions that we have. One has to do with, can they front expenses? I mean, and it's apparently they've done this. They kind of prepay their expenses from 1 month to the next, right? So within a covered period, they've kind of already prepaid. So talk about prepayments and, how that happens for non-payroll costs during the covered period.
Right. So our take on it and the most conservative approach is that if it's not paid during the covered period, it needs to be paid in the next billing cycle right after the covered period. And you can only take the amount that was incurred. So you can't, if let's say the whole year was paid in the covered period, you can only take 24 weeks of that. So it's just really important to be fair and say, okay, let's say if you didn't pay it at all, you can't take it. But if you do pay it, like I said, within the covered period or the next billing cycle right after the covered period, the amount eligible for forgiveness has to be what was incurred during the covered period.
Okay, so if you prepay your rent the prior month on a consistent basis, your covered period is 8 weeks, let's say, and so you have 2 months of rent regardless of when you paid it, as long as it's paid consistently.
Well, the thing is, you have to pay it. So let's say the covered period started May 5th, but you paid for the rent May 1st. You have to use the June 1st payment
Okay,
and go forward. It has to be paid during the covered period or the billing cycle after.
okay. So I think that answers Joseph's question. And then he says the deadline to file for the second PPP is 3/31.
Well, that's going to be extended in the next day or so to May 31.
Okay, so the 2-month extension is expected to go through. So the deadline for filing for a second PPP application is going to be helpful to many folks here.
Mhm.
So then we have a question from Lourdes that says, my first loan was initially set for 8 weeks. Is it allowed to be extended to 24 weeks? So regardless of what your first loan was, is the second loan allowed to have a different period?
Yes. And also, I think this question is when the CARES Act first came out, it was an 8-week covered period. And then they said any loans received after June 5th could be 8 or 24 weeks. And then if they were received before June 5th, you could just go to your lender and say, hey, I want to elect 24 weeks, no problem. And yes, I mean, you could choose freely what your second loan covered period is.
Okay.
8 or 24 weeks.
And so that answers actually the following question.
Yeah.
Then another question from Joseph has to do with a lump sum bonus or paid and how that affects the 60% payroll costs.
Right. I mean, you can pay bonuses, no problem. You just annually cannot exceed 100,000. So you would max out at 46,154 for each employee if you
So
pay it during the cover.
Okay, is that a strategy to maximize the 60%, to get to the 60%, is to perhaps?
Absolutely.
Okay,
Pay bonuses.
yeah, great. And so the next is anonymous, but we just want to, again, answer their question. And yes, it's 60%.
60/40.
60/40 applies back to 2020, correct?
Yep, it's the rule.
One person asked what happens after March 31st, and we just answered that question, that will be extended. Talk about cash compensation, S corp, and how they're capped out.
So right, an S corp owner, basically, this one's really interesting because S corps are required to pay owners a reasonable compensation via W-2, and that amount includes health insurance. So we get a lot of questions about S corps that didn't pay a salary to the owner and said, well, how do I get? I took a distribution, but I didn't pay a salary, and the answer is that distribution does not count as forgiveness eligible use. So you have to pay your owner a W-2 salary, like a salary reported on the W-2, and it's maxed out at $20,833 for 24 weeks and $15,385 for 8 weeks, and it includes the health insurance. So the only thing you add on to an S corp is the retirement and the state and local.
Okay, so all right. I'm trying to read these and they're bouncing around a little bit. And I think we kind of answered their question about, the PPP and the ERC payroll tax credit. Or not the payroll tax credit, but the employee retention credit. So
how do you calculate? You're saying?
I'm not sure that I understand their question. Wanted to know about receiving payroll tax credits, even though I'm receiving, the 2 PPP loans. How do I calculate when I use payroll for employees for loan forgiveness on PPP 1? So they may be talking about the payroll tax deferral from last year or this year.
Well, those calculations are really complicated. It's really easy if your PPP loan covered period just stays in one quarter. It doesn't fall into another quarter, because that's where it gets complicated. If it's just in one quarter, then we take that quarter's gross wages and we subtract the PPP wages, and then you get how much is available for the ERC. When they overlap quarters, that's when it gets complicated, because you have to separate them between the quarters and carve out a piece and another piece. But we do that because we're trying to maximize. So we have calculators. We have a whole team dedicated to that. So if you really want to run those numbers, they are complicated, just reach out to me and I'll forward you to one of our team members.
That would be great. Thank you. So Joel is asking about a 1-person reduction. The person left to take another job, and I think we covered that earlier, but probably worth stating again that when it comes to the FTE calculation, if somebody leaves of their own accord, resigns,
just make sure you have documentation, like a letter of resignation, just in case.
Okay. And then the same applies if you terminate for cause, which obviously would have documentation as well. They would be excluded from the FTE calculation. Okay. So Debbie asks, the county did shut down the hotels in March and said we could only have essential travel. So we cannot bring back all the FTE back. They couldn't bring back all their employees. So how does that affect their FTE calculation? Are they within the safe harbor? And they're not clear on how the form allows for these types of calculations.
So for this one, there's an actual, so for the Form 3508EZ, it is one of the certifications that you initial. And for the 3508, it's actually a checkbox on the Schedule A. And I could show you what it looks like if we have time.
Sure, we do. That would be great. That'd be very helpful.
So here's the 3508. And let me try to share my screen this time.
Okay.
Oh, this is the 3508S.
So while you're doing that, Maggie, somebody is asking about applying for forgiveness on the first round. Our bank tells us the site is not available. Is there an ETA as to when it would become available? Well, that's going to be, I guess, some banks are requiring them to submit their forgiveness application through their portal. So I think that, in that case, they really have to wait for their bank, but you would encourage them to fill out the form, right? And to have everything ready to go when.
Exactly. Yeah, they're just really trying to catch up. The banks are inundated with questions on the second draws and loan forgiveness applications. It's really been a lot for them. Can you see my screen?
No. Oh, it's coming up right now, Maggie.
What can you see here?
Yes, we can see.
Okay, so this is the 3508EZ. And to make that certification, it's those two criteria are down here. It's a little misplaced, but like I said, you have to initial one or two of these. The first one is that you didn't cut people between January 1st and the end of the covered period. So that's January 1 to the end of the covered period. And then the second one was shutdowns or compliance with CDC for the restaurants and hotels. So if you initial one of these, you don't have to worry about the FTE calculation.
Okay.
For the long form, that same exact question is on the Schedule A here, and it's these check boxes. So this checkbox is that you didn't cut employees January 1st under the covered period. If you check this, then you don't have to do anything.
Okay.
And then here's the Safe Harbor 1 for compliance with CDC. See, if you satisfy any of these criteria, skip lines 12 and 11, 11 and 12, and enter 1. So you don't have to worry about the FTE calculations.
That is very helpful. Thank you. So we have a couple of questions on if they were part of the first round in last year, 2020, that when's their deadline for applying for forgiveness?
So the deadline is 10. So for you to not pay interest to basically have the deferral of interest and principal, you have to submit the application 10 months after the end of the covered period. Okay. So if you had an 8-week covered period, that 10 months is really soon.
Okay. So that answers several. So here's a dental office that was required to suspend patient treatment, during the second quarter. And to qualify for the ERC, what documentation is required? We do not meet the 50% gross receipts reduction criterion. But was there not a criteria if there was, I know that in Miami-Dade County, we had a shutdown that was instituted by the mayor and early on. And that was, only essential businesses were allowed to keep their offices open. Would that qualify for the ERC?
Right. Yes. A partial shutdown of the business. If you are going to go this route, I recommend reaching out to your payroll provider. They have checklists that they provide to their clients. Checklists of information they would need to certify that you are eligible for the credit. But just have, if you're gonna, I think that's fine. You basically satisfied the partial shutdown. I would just keep the documentation, like the mayor's orders that required you to shut down, handy in case the IRS, asks for it.
Okay, great. One person's asking about PPP for the self-employed, what's required. And I know that the calculation might be a little bit different in terms of Can you address that issue?
For the self-employed, you need your Schedule C. So you'll need a mock 2020 Schedule C or the 2019 Schedule C.
Okay. Great. And when a PPP loan is forgiven, somebody's asking about how is that reflected on the balance sheet?
Yeah,
I guess,
that's a good one. So your loan should be on your balance sheet until it's forgiven, and then when it's forgiven, you write it off and record cancellation of debt income for book purposes. For tax purposes, that is an M1. Cancellation of debt income is not taxable. It's tax exempt income. So
Okay.
we recommend waiting to write it off until you actually receive notice that the loan was forgiven.
Okay. And so that might affect, your annual statements
Right.
negatively or positively, however you want to. So can the amount of payroll costs in a 24 period be higher than the loan amount? Yes, but the amount forgiven will only be the loan amount, right?
Yep.
So I don't know if you can see some of these questions.
Yeah, I'm looking.
Okay. We applied for the second draw through the same bank and our application has been denied. We don't understand why it was declined. There could be various reasons. Were there any changes that would have?
Right. I mean, the banks, even though they don't require that documentation for gross receipts decline for loans under 150, they are still asking for it. The banks are being very diligent here, and they're doing their due diligence.
Yeah, we experienced the same. They actually required some of that documentation.
Right.
Yes. So we've already addressed independent contractors, Schedule C. Here's somebody who has two companies. One easily met the reduction of the 25%, but the second one just has a revenue reduction of 18%. So I guess either for the ERC or the second round PPP, they may, I guess they're two different entities. They can apply for the other entity.
Yeah, it sounds like when they switch to a cash method, they what's the word? They're able to get the loan, but on accrual they cannot. We've seen this. You need to use the method that's used on your tax return. So if your tax return is presented on cash method, you use cash method financials. Or if you want to show the bank statements, you can do that. So that is an option. So if your way of going about showing the 25% reduction is through your bank statements, then do that. But if you're going to use financials, you got to match the tax returns.
Okay, so you can use, if you are an accrual method company, you could use your bank statements and essentially go by the gross receipts. And one question I would have on that gross receipts, loans would be excluded, right? So if you had like a line of credit and you were taking, you were utilizing that line of credit, you would exclude that from your cash receipts calculation.
Exactly.
Okay. What about tips? Tips paid by employer to employee considered part of the compensation for purposes
Yes,
of,
because those go in Medicare, Social Security wages.
Okay. And we are at top of the hour. I'm going to pass this back to Alfred to wrap it up. We will get your questions answered. If you'll look in the chat, I'm sure that one of our staff will put our GMCC Cares link in there where you can continue to get help from us. Thank you very much, Alfred.
Thank you, Mary Lou. Thank you, Maggie. I mean, listen, we've had over close to 50 questions. So that tells you how many people out there are confused, and it's confusing, right? I mean, there's a lot of information. It constantly changes, as Maggie was pointing out, as they try to refine things. Thankfully, They all have been positive changes, mostly for the employers. So, and obviously that helps us keep the employees. So a lot of people have asked, are we going to make the presentation available? Maggie, are we going to be able to post that?
Absolutely.
Okay, so we'll post that on the website along with our recording of the session, so you can catch up. And if there are any burning questions that we didn't get to, please make sure that you can go on GMCC Cares, and the website and the link to it should be in the chat. And if it was, and if it's not, I'm sure that staff will do that now. Go there. And you can talk to Mary Lou, you can talk to one of our other staff members to get your question answered. And again, if you're having issues after all of this, and it wouldn't be surprising, with your loan forgiveness, or if you're going to get ready to apply for another PPP bite at the apple, do the same. Get in touch with the GMCC Cares and let us help you go through that process. If this is the first time or second time that you're applying, you heard a lot of strategies that Maggie and Mary Lou sort of shared in terms of how you should approach it in the future to maximize your ability to fully utilize the cash and to get it all forgiven, because none of us want to have that sitting on our balance sheets after all this and have to pay it off in a short period of time. Okay, great. So listen, we want to thank you all for being a part of this. We mentioned at the top of the hour, the GMCC Cares. I want to also refresh everybody's memory that CareerSource has also made some very generous grants available that the chamber is administering, up to $10,000. And these are layoff aversion funds that basically are reimbursement grants that help you recoup some of the costs that you have had to incur in order to make your business safe for your customers and for your employees. So please look at that and avail yourself of that. There's a lot of capital out there. We all need it. So please use it. Okay. Thanks again for joining us. There were a lot of you. I hope we got to most of your questions, and I hope that you'll join us again. Until then, please stay safe, wear your mask, continue to follow guidelines, and get your vaccine when you can. Thank you very much, and we'll see you next time.